Welcome to Infinity Capital, everyone. This is Raj. So today we are going to talk about Alembic Pharmaceuticals. This is a 20,000 crore market cap company. It's a mid cap pharmaceutical company. So let's go over the history of this company. This was formed in 1907. It's more than 105-year-old company. They started by making alcohol, then they ventured into making cough syrups. They started manufacturing bulk drugs, vitamin B12. That's how the story of this company started, right? So currently they are into finished formulations as well as APIs. So they have three R&D, setups and five manufacturing facilities. So basically, they make these generics medicines, wherein they export these medicines to the US primarily, and the rest of the formulations they sell in India. They also have a domestic branded business, wherein basically they sell their branded medicines under the name of Alembic Pharmaceuticals in India. Apart from that, they have an in-house API development vertical. So they use some of these APIs for their own finished formulations, and they also have an R&D facility in Vadodara and Hyderabad, which basically caters to their business. Now the only catch here is that they have around 14% of their sales as R&D. This is relatively very high as compared to industry standards. So if you are planning to do a long-term investment in this company, then you should take a deep dive into why this company is spending 14% of its sales on R&D. So the promoters hold around 69.5%. They've diluted some of their stake since last year. So basically, the DIIs have increased their stake from 7 to 11%. So promoters' stake have been transferred to DIIs. Public has around 13% shares, to be traded publicly on a regular basis. So this shareholding pattern looks pretty good. We need institutional sponsorship in stocks for continued up move, because we all know that retail does not have the stomach to hold on to its gains for longer period of time. So usually if a stock goes up 10-20%, retail starts selling. So you need institutions who will hold on to the stock for couple of years or more than a few years, and we have sustained uptrend in the stock price. So this company generated roughly 1400 crores of cash from operations, and if you see here, they've been constantly generating positive cash flow from operations. So that's a very good sign. On the balance sheet front, if you'll see, they had borrowings of around 1800 crores. So that has come down to 500 crores. So that's also a very good sign. Okay, they have investments of around 236 crores. Cash on the book is around 100 crores. So this goes to show that the balance sheet is pretty strong. Now, other interesting thing to look out for is the gross block. The gross block essentially tells you that the company is doing some form of expansion. It could be a brownfield expansion or a greenfield expansion. So that is the reason why the gross block amount has almost doubled. So if you see, in 2018, the gross block was around 1200 crores. Currently, the gross block is around 2500 crores. What this does is, guys, it increases the depreciation. So depreciation is essentially whenever you buy a car or any sort of office or inventory or electronics, the value of the asset keeps on depreciating on a year-on-year basis. So that needs to be deducted from the profits. That is the reason you will see that the depreciation is basically eating into the profits a little bit. Once these new capacities are up to their total operational efficiencies, we will start seeing a sudden burst in sales and profits. So it could be that one of the the capacities is not functioning at full capacity, and once this capacity starts working on full capacity, that is when we'll see sudden burst in sales and profit increase. So let's do a quick check on the P&L. There's not much effect on this company's profitability because of COVID, because if you'll see, the profits have been rising year on year during the COVID year as well as last year. So sales have been rising, the operating profit margin has risen, and that has also basically doubled the net profit in the past 3 years. So in 2019 they were making 600 crores. Last year's profits are roughly around 1200 crores. So their profits have almost doubled. All right. Now, if you see, the depreciation has also doubled because we saw that, you know, their gross block was increasing. So once the operations are at full capacity, we will see that, you know, the sales will increase at a higher clip, and that will add more profitability to the company. If you do a quarter on quarter check, the March sales were higher and the profits were higher too. If you look at the December numbers were also pretty encouraging. So overall, the numbers are very strong. That is the reason why we are looking at this stock. On a 5-year P analysis, the price to earnings is a median of 19.4. So the median P for the past 5 years has been 20. Stock is currently trading at 16.4. So there is good upside room for this stock to go up. Now the max P for the past, since the stock has listed, is around 46, and the recent 5 years max P has been around 28. So we have a lot of upside, possible in this stock based upon the price to earnings ratio. Let's do a technical analysis check. So if you'll see, the stock was basically consolidating in this range since 2015, and it broke out in 2020. So for 5 years the stock was consolidating between 400 and 800, and then the stock finally broke out of that range. And now if you'll notice that the stock has been consolidating in a 25% range between 860 and 1130. So this is the range where there is consolidation happening. And as we saw earlier, if you see that earlier, since June last year, DIIs only had 7% stake in the company, but currently their stake has increased to 11%. Interesting fact to see is that the stock has been consolidating since June. Guys, you have to keep in mind that the DIIs hold 11% stake in the company. The company's market cap is 20,000 crore. So they roughly own 2,000 crores of APLL Limited, which means that the average weekly volume of the stock is only 16 lakhs. And that is the reason it takes 6, 7, 8, 12 months sometimes for companies to accumulate the stock, because you cannot buy 2,000 crores worth of stock of the company in 15 days or 20 days, right? And that is the reason why the stock has been consolidating since June. So what is the trade here? How can we benefit from this? So basically, let's look at the moving averages. The 50-day moving average has gone sideways, 200 days trending upwards, and the stock is trading around these moving averages. All right. So what is the entry point? This is pretty much the range that I'm looking to accumulate the stock in. I have been accumulating this stock. So 930 and 1030. This is the range that I have been looking to accumulate the stock in. What sort of upside can we look for in this stock? So as we saw earlier, that the stock is trading below its median PE, and the company has doubled its profit in the past 2 years. So we can see a good 40-50% rise in this stock. Also, last year's India's total expenditure on healthcare was 15,000 crores, and you can imagine what it would be for developed countries. So Alembic's 50% revenue comes from developed countries. So we can see more profits coming in the future. The likelihood of profits rising is pretty high, because I mean COVID is still happening, and I think we are going to be in this situation for the next 2 to 3 years at the very least. So we have a good trajectory for the next 2 3 years, and if profits keep coming in at a higher clip, we can see sustained up move in this stock. So I will be holding this stock for the next 2 quarters for the at the very least, looking at a 40 to 50% upside in this company. Thanks a lot for watching, guys, and a quick disclaimer: this is not a buy sell recommendation. So this video is for educational purposes only. Thanks a lot, guys.